Hello everyone, this is Sandeep Vijay and welcome to our YouTube channel Vijayodaya Wealth Vista Investing Made Simple. The main motto of this YouTube channel is to help ordinary people invest in stock market. As a part of it, we are covering very few basic topics from the stock market. So that is one, how to create a demat account, what is an IPO and how to apply for one, what are mutual funds and ETFs, how to develop a stock portfolio. So let's look into the presentation.
Basic topics that will be covered. One is demat account. So what is a demat broking account and how to open one for trading and investments? A digital it is a digital repository where your securities such as stocks, mutual funds and bonds are held. Demat accounts may be of two types. One is that is provided by the banks or it is of broking app. So for example, HDFC Bank provides HDFC securities like that you have Kotak Neo, ICICI, Axis Bank, etc. Broking apps such as Grow, Upstocks, Dhan, 5 Paisa, etc. are there. I would say Grow and Upstocks are good for long-term portfolio building. Zerodha and Angel One are good for trading. Also, you would have heard the term NSDL and CDSL. These are the depositories where your stocks are actually stored. So suppose if you want to buy a stocks that is from an unlisted market, then you can easily get the stocks bought through NSDL or CDSL account. Even when you are transferring some of the stocks from one broker to other broker, at the time you need NSDL and CDSL accounts. So the upcoming session, I will show you how to open a demat account on live. The second topic would be IPO, initial public offer. I would like to say if you apply for all the IPOs in a year, you can easily make from 1 to 2 lakhs. And if you are a HNI investor, that is high net worth individual investor, then you can easily make up to 5 to 10 lakhs in a year. So, when a company needs additional investments and decides to go public, it lists on NSE or BSE and it is called IPO. In IPO, there are mainly two types. One is main board and the other one is SME. So, the main board IPOs are generally an established companies. The main requirement for main board IPO is that that company has to provide its reports, financial reports for the consecutive 3 years and then apply to SEBI to get an approval for IPO. The generally size of the main board IPOs will be from 100 crore to 15,000 CRs. This year we had a plenty of IPOs. For example, Bajaj Finance, we had our NSDL, so etc. And then the application categories. There are three types of applications. One is retail, then small HNI, big HNI. The lot size will be of 15,000. So in retail category, in the multiple of 15,000, you can apply up to 2 lakhs. From 2 lakhs to 10 lakhs is considered as small HNI and above 10 lakhs is considered as big HNI. The SME IPO, that is small medium enterprises IPO, uh, a lot size will be of 1 to 1.2 lakhs and the relative total or size of the IPO will be within 100 to 200 crores. So the since the companies are small and even their financial reports are not produced only for 1 or 2 years, the amount of risk involved in SME IPOs is comparatively higher. OFS, offer for sale, when a company or an individual holds more than 5% of the shares of a listed public company and wishes to dissolve his shares, he can apply for SEBI and issue an OFS, offer for sale. During that time, the price of the stock will be fixed by the individual or the company and approved by SEBI. So you can bid for those shares by contacting your broker. That is, for example, I use an Angel One application. I call angel and customer team and then ask for a bidding. So the upcoming sessions, which will be very much interesting, IPO review. We have planned to have a weekly IPO reviews. In that will be mentioning you the websites where you need to refer the IPO reviews, and I personally review the IPOs. Then I provide the GMP and the key investors comments on the upcoming IPOs. Also, I will like to show apply from how to apply from multiple accounts in one click as per application process, tricks to increase the allotment chances, etc. So the third topic is mutual funds and ETFs. A mutual fund is a set of stocks traded and maintained by an established fund house. That is, here the mutual fund consists set of mutual stocks, and that is maintained by an established fund house manager. For example, we have multiple fund houses like HDFC Mutual Fund, Parag Flexi Mutual Fund, SBI, Mirre Asset, etc. The value of mutual fund is measured as net added value. So the net added value will be average of the company share prices and the stock holding values. So it will be traded in NAV. Mutual funds can be classified also based on the cap size, theme, purpose of investment, risk involved, etc. So there are several fund houses, and their maintenance charges also vary from the stock to stock, like the mutual fund to fund, and from fund house to fund house. We will deep dive in the upcoming sessions, and also I will give my best five picks in the current market scenario. Equally traded fund. ETF is basket of equally traded stocks, generally less in number, that is 10 to 30. Note, both mutual fund and ETF distribute their weightage to different stocks. It will not be same. Like if there are 20 stocks, it is not each having same weightage. It will be distributed. The main difference between mutual fund and ETF is that mutual fund usually has larger number of stocks, so the risk is evenly distributed, and it will be the stock holding will be maintained for a longer period. Okay, so the next upcoming sessions, I'll also give the best mutual funds, best ETFs, and also the global ETFs which are on focus because the US taking back its focus. So the next topic would be stocks. So everybody dreams to have a best long-term portfolio. So through Vijayodaya, we want to support you to build up best long-term portfolio. So I have a different classification. So stock investment for a period of greater than 1 month and up to 6 to 8 months is considered a short-term investment. Investments made for a period greater than 6 months, I would consider them as a long-term investment. And an ideal portfolio should have a stocks less than 15. I've seen people having more than 25, 50 stocks, but over the time it is very difficult to track the risks involved and to manage the portfolio with the holding percentage and all. So, when a stock is traded for some days or weeks, then it is called stock trading. I would personally suggest long-term stock investing, and you do the trading in index funds or something else, and not in the stocks, as it is very much risky. So through Vijayodaya, we will analyze your portfolio and help you to build long-term portfolio, a better long-term portfolio. Also, in the upcoming sessions, we will discuss the industry that is on focus in the current scenario, and also the best available stocks. As you know, the already the markets are down. You have a great opportunity to pick the best stocks right now. So please don't forget to like, share, and subscribe our YouTube channel Vijayodaya Wealth Vista. Thank you.